What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is October 1st of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about the great performance we've seen in crypto over the last 24 hours since we spoke, diving into both Bitcoin and a few different altcoins that we're watching, and outside of that as well, talking about one of the big headline pieces of news, JPMorgan, for years, claiming that it was nothing but a conspiracy theory, claiming that it was nothing but noise, finally getting accused officially of manipulating the prices of precious metal markets. And we're going to be talking about that later on, and why a lot of people were vindicated for their positions for a long period of time. Or I think that's the proper term. They were kind of proven right in a sense. Anyways, outside of that as well, we'll also be diving into a sponsored interview with Mauricio from Lenin.io, so stay tuned for that. You won't want to miss it. Let's go ahead and dive straight into this, everyone. So going to take a look here over the next 24, 48 hours, not only have obviously the market leaders such as Bitcoin and Ethereum done well, but really over the last 7 days, the overall market has had a really positive week. Just diving in here to the last 24 hours, though, we can see that a lot of major plays, mainly DeFi or enterprise blockchain plays, again, leading the way. Ren, Celsius, Digibyte, Algorand, BitTorrent, Ocean Protocol, Maker, Monero, Zcash, Waves, and along with that as well, Aave, Omisego, and Synthetics, all in double-digit territory, with other plays in the Oracle space and different cryptos abroad doing very well. We can also see as well, just taking a look at the DeFi index or list here on CoinMarketCap, we can see over the last 24 hours, a lot of DeFi plays in double-digit territory or up to the green side here with very few exceptions. And over the last week or so, it's been really phenomenal here over the last 7 days. Oops, I apologize. Sometimes you have to make sure you get the green one. In this case, you can see here the vast majority here, again, are in the green here with very few exceptions down here. So taking a look at Bitcoin, I wanted to do a quick review of Bitcoin. I know we just talked about Bitcoin yesterday. We did a video talking about how Bitcoin was really at a discount, priced alongside most cryptos, and like how now is really the time to pay attention. Well, if you're here right now, guys, I can tell you all it's probably going to be quite rewarding. If you're looking to add to the space or you're looking to build your first position, because as we take a look here at the monthly for Bitcoin, the price is doing exactly what it needs to do. A lot of people will, again, overcomplicate, focus on the short term. But what Bitcoin did here at the close of August is extremely significant to institutional investors. And institutional capital is what's going to drive the major price moves until we get above here around 20K, the previous all-time highs, where retail volume might take over and start to really dominate how the market moves. Right now, what we saw was Bitcoin closing at an official price here of around $10,778, roughly $10,800, give or take. You'll get different rates on different exchanges. But the important reason why this is a really good close, even though it was a down month, we actually saw Bitcoin close at a total loss of 7.5% for the month. This is actually not only one of the best kind of corrections because it's not even 10%. So in this case, it's a nice, moderate discount or pullback in price. But along with that as well, taking a look at this logarithmic chart, we can see here that in price, we're resting right here on previous resistance back here in the past. So we can see here in the month of February and March of 2018, and along with that as well from June and July of 2019, this was a contested price range. Sure, the wicks here on each of these candles actually went up quite higher than that range. But the close here, right, the close of each of these months was at a very similar range here. The close in the open in this case was where the general resistance was. Same with over here. So having Bitcoin come down here on moderate sell side volume and moderate downward price movement, it's actually pretty good. And to have the kind of positive price action we've been having ever since here, just taking a look at the weekly, we've been holding at this range. This is looking very nicely here. Holding on this kind of shorter term point of previous resistance at 10K, making that new support and setting at higher lows. That's the stuff I like to see. Now, again, big thing here that you're going to see in the headlines is Bitcoin posts the biggest monthly price loss since March. Well, that's actually kind of a good thing for new capital to flow in. Again, we don't get fearful when there's price corrections. We don't get fearful and completely move out of our positions when Bitcoin goes down 5 or 10%. It's not only normal, but yeah, it's going to happen when Bitcoin goes up more than 150%. Well, I guess not 150%, but over 100% in this case. Actually, no, sorry, I apologize. If we're talking all the way back in March, yes, definitely this case. I mean, again, just keep in perspective, guys. We're talking about the bottom to top performance here, right? went over 222% here. Now, of course, many of you probably didn't buy down there, probably about somewhere down this range if you did buy the dip, right? There's going to be some kind of correction of some sort. It's just practical to expect that. So again, I would say that headlines like this make me really confident that, when there's corrections or markets are seeing their biggest loss, this isn't a substantial loss to the market, and it's not a paradigm shift in the trend. More than anything, it's a bump in the road. It's a correction. It's a buying opportunity for me personally. And again, that's why I averaged into ETH back about a week ago. Now, taking a look here at the broader altcoin space, wanted to talk a little bit about some of the plays we've either been holding or been watching. One of the big ones we shared not only here on the channel, but through our newsletter was Omise Go. I literally picked up a position. I was checking my trade. I literally bought it somewhere down here around like 2,500 sats right near the bottom. And this turned out to be a really good trade. I just basically was focusing on, again, the simplest principles that I focus on. Naked trading, support and resistance. This was a key support range in the past. It turned into resistance. It served as resistance here and here. It was a highly contested price range. And Omise Go has continued to pay forward as a trade. I'm still holding it. Haven't taken any profits on it yet. I like the fact that it looks like it's easily passing this point of resistance here around 4,000 Satoshis, very big even level. If it breaks through that, I feel it's just going to continue to climb through, set those higher lows and higher highs. Again, perfect trading setup. Very common repeat of what happened back here. We had the correction. We had our first kind of accumulation period after having a nice bump up. Second accumulation period, full rally. First accumulation period, second accumulation period, or kind of sideways price action, and then further rally up. And with Omise Go doing layer 2 scaling solutions like its implementation of Plasma, I think in this case that you're going to see a lot of demand for this, especially for stablecoin payment networks. But all in all, guys, if things like this, or for example, plays like Ample, which we've talked about before, if these interest you, you can always go check out the Dash report. It's down below in the description. We've been getting a lot more subscribers as a result. We've been building a great community up. It's been a lot of fun. But all in all, another thing I wanted to talk about was Ample. Ample finally got a bump up here today. This has actually been probably one of our worst calls, to be fair with you all. We made a lot of great calls back in July. August was a pretty good month as well. September was probably not one of our best months. A lot of our plays were kind of either neutral or, maybe, for example, took a slight loss. But bear in mind, the important thing to realize when you look at these markets, just like our month in July, is that crypto markets were obviously more optimistic during that time. So what we do is we not only cover cryptocurrency markets, but we talk about traditional markets, such as equities, Forex markets, and commodities as well. And it's important to realize that sometimes you have to circulate capital between the different markets, but really depending on your philosophy in this case and how frictionless you can move capital, sometimes you just have to have diversified exposure and realize some months aren't going to be great months. Right? It just happens sometimes. Or sometimes you have to go into the stable coins or go into options that will reduce your volatility or price exposure. But all in all, I really like this here. To me, what I'm seeing is kind of a general descending wedge here with the the lower highs here in this case coming in at a faster rate for Ampleforth, right? You can generally see here, again, these lower highs here are coming in at a pretty accelerated rate down to the downside. And along with that as well, roughly speaking, if you're generally kind of taking the support range here, back here, and back here, and back here, you can start to see here that we're building a descending wedge. Again, with the top coming down quicker than the support range. This to me looks really exciting, and it kind of gives us a roadmap here where we can kind of expect, probably setting in for a third test here on Ampleforth to possibly continue moving higher. We will see though. Again, I just wanted to share this with you all. I think when you get these kind of bumps ups in price, or when you get the first initial kind of like big green day after multiple red days, I think in this case, this is something to look at. Maybe if you haven't built a position in Ample and stuff, or if you're holding right now, just to keep an eye on price. Now, let's go ahead and talk about this macro piece of news here. So I remember back as far back as 2011, 2012. When I was originally kind of going through I wouldn't per se it was a libertarian wave and stuff, but I was going through and understanding, central bank monetary policy. I was studying, the archetype of the central bank system, and I was also learning about, the corruption in the commercial bank sector and how manipulation can play out in markets. Many of you probably saw a long time ago back in 2018 my video that I did on how markets are manipulated. And the interesting thing, I talked about how crypto markets are manipulated, but the ironic thing is that a lot of those methodologies were not created in cryptocurrency markets, and they are not synonymous to cryptocurrency markets. In fact, they play a very big role in other traditional markets. Well, we saw JPMorgan and Chase, one of the largest commercial banks in the world, probably the largest in the sense of market capitalization, at least in the United States, finally admitting and coming clean on over millions, if not billions of dollars in trading fraud in regards to precious metals price manipulation. So again, let's go ahead. Let's dive into this news here. Try to break it down. They've had to agree to pay a $920 million fine. And as I quoted here in the tweet here, for years, people were called conspiracy theorists for claiming that this was happening. I was even on the fence because, I'm someone, again, I like to just kind of see the proof in the pudding. And I think above all, the biggest proof was just how commodity prices played out over the last few years and how JPMorgan, as we'll learn, utilized a methodology known as spoofing, as we've talked about on the channel, to manipulate algorithms and other traders' perception on how the market, price should be determined in this case, to basically weigh in on the kind of like demand to either buy or sell in this case. So let's go ahead and we'll dive into it here. So in order to understand really what happened here, we don't have a crazy amount of details, but it's important to understand what spoofing is. So spoofing in this case is to give the perception that you are going to either buy or sell a large amount of a given asset. So for example, if we just dive over into the silver markets, we'll come back to the article here in a little bit. I just want to go ahead and give an example here. So I don't really have a good visualization of, per se the order book here through TradingView. But as you all have probably seen on exchanges, price is discovered mainly not just through market orders, it's through the limits on the bids and the asks. So these are the kind of like diverging parts of the order book. If you look up a photo of an order book, you'll be able to see it very clearly, where you have what's known as the bids, and it's usually kind of like a green box of like values that get bigger and bigger as you go to the left-hand side of the screen, and also on the right-hand side of the screen, you have the asks, which cave in towards the bids. And basically, these are buyers coming in at different prices and saying, hey, I'm willing to buy SLV or silver at, for example, 21. Right now, so the current market price is 21.64. Market hasn't opened yet. But let's say, for example, that, actually, we can see it right here. They do actually have the bids and the ask here. You can see here that pre-market silver is going to be up around $22. And we can see the bids here saying, hey, look, the closest price to the market price is $21.98. I'm willing to buy 2,100 shares. And someone here at $22 is saying, hey, I'm willing to sell 38,500 shares, right? The price is changing a little bit. But this is the bid and the ask. It's kind of like, hey, either someone's going to sell to the bid at this price or someone's going to buy market price. They're going to buy the ask in this case, what the seller is asking for, and what the buyer is saying, hey, I'll bid for this, right? So think of it kind of like, like a two-way auction in this case. People are kind of saying, hey, I've got this opportunity, you want to take it? And the other one's saying, hey, I've got this opportunity. All right, so we understand bid and ask. I've actually done a video if you guys want to learn about how to actually kind of read the bid and the ask. But one thing that's important to note with that is that anyone can place orders. And in many cases, that companies like JPMorgan and their traders have perfected ways to basically establish orders that are not meant to be fulfilled, but in fact are meant to provide some perception or some false perception in the market. So let's say, in this case, it just happened to be that over the last few years, JPMorgan was building a massive position in silver. It didn't really make much sense because a commercial bank, in this case, probably doesn't want to bet on a hedge in this case. They probably would want to bet on financial instruments like stocks, ETFs, other equities. Well, they're building a large position in silver, and what this gives them the ability to do is either make fake buy orders or, what's probably more likely, sell orders. Now, in this case, why would they be setting limit orders or asks on the order book to basically say we want to sell 1 million, 2 million, 3 million shares of SLV? Again, we don't know the actual numbers. I'm not claiming that, guys, but just hypothetically speaking, why would they want to do that? Well, what it does is it further suppresses price. Algorithms will read those orders whether we like it or not. And along with that as well, other traders who are watching the order book will go, oh my God, someone is saying that at this price right here, at $23, for example, that they have 5 million shares, 10 million shares of SLV that they want to sell, and they want to sell it at this price. And the problem is that until you clear through those shares, silver will not go higher. So spoofing is commonly, kind of seen as this method to kind of manipulate people and think that there's a big seller, that's really like almost ready to dump on the market. But the biggest problem with it is that when you get such a large share in that asset and you keep it all at one specific price, unless there's a buyer to come in, an institutional buyer who has a lot of capital who wants to buy a lot of silver, There's no way where price can get above there. That's the biggest effect of spoofing. And because of this, we have, again, downturns in the market where the price goes lower and lower and lower, and then JPMorgan acquires more silver. And the whole game of this here, as you might understand, is that they can not only probably take an additional short position on the way down, betting against the market and benefiting from their illegal spoofing. That's the important thing to keep in mind. It is illegal, and that's why they're paying almost nearly $1 billion in fines. But along with this, eventually, once it gets so cheap, they've accumulated so much, and then they can stop doing it. And then the market starts to accelerate. Price comes back into play. You have an event like COVID, like we did, and then the price just shoots up down here from $11 all the way up to $27. You think that's normal? I don't think it's normal. I don't think most people believe it's normal. If you look at the price over the last few years, silver has been suppressed massively. And I got to hand it to a lot of people. Again, during the early days, I was a little bit hesitant of it. But over the years, as I saw silver continuing to be manipulated in price, it became obvious. As I became a fan of just actually analyzing price in the market, it became very, very clear that this was happening. And it made it very clear why JPMorgan was building such a large position in silver. Now, I might be misinterpreting. I want to be very clear to you guys. We don't know exactly what JPMorgan was doing with the trading. We can't get these kind of details from the Bloomberg article here. But this does provide a very good perspective here. The sad reality is, I have no doubt that the $920 million in fines that they're paying, I tried to read through the article, couldn't find any kind of conclusion on it. I don't know. As per usual, it tends to be that the fines don't outweigh the money that they've made. But this one actually seems like a pretty big fine, to be realistic with you all. Again, I think this actually sounds, in this case, like they probably, with the potential price gains they might have made with silver, actually might have faced more penalty than actually what they made, which would be really surprising to see. And I would like to see more of this when there are people doing, things that are illegal when, they probably lobbied these laws into place, alongside other financial institutions, right? Or again, this is kind of rules that are set in by the SEC, the CFTC, again, I just think about vol. It's ironic that the institutions of the world that we trust with our money and, are supposed to reputably trade in financial markets are playing against the rules that they generally set. Anyways, last thing I want to share with you guys real quick before we dive into our sponsored interview is for digifox, we are doing our last day and a half here for equity crowdfund. If you want to participate, please consider. We've had a lot of people coming in the last minute, and we're very excited to have as many people join on board. 830 different investors. I would love to see us reach up to like 900 or 1,000, even if it means a lot of you are just putting in like 100 or 500 bucks. It doesn't matter. I don't want to pressure you guys to do anything, but this is probably one of the best ways you could support me in my dream to build better finance for everyone and bring DeFi to the masses. We're really excited about the potential for digifox in the long run. But speaking to DeFi and the broader trends in the crypto space, let's go ahead and dive into this interview with Mauricio from Ledn.io. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with Mauricio, who is one of the co-founders over at Ledn.io, one of the leading platforms to put your capital to work in the cryptocurrency space. Now, many of you have probably seen an interview or two of Mauricio and I before on the channel. We do these conversations from time to time. And Mauricio, as always, it's a pleasure to have you, man. Thank you for making the time.
Yeah, always a pleasure to be here, Nick, as always.
Absolutely, man. So there's been a lot of things. I mean, every single time we usually talk about like a month apart, but there's like always constantly new stuff going on in this space. And boy, is it been crazy to see what's going on in DeFi. And most importantly, I have to give you guys kudos as well as the other providers in this space. I think you guys have been moving extremely quick as a business. I think a lot of people are really getting interested in putting their stable coins, cryptocurrency assets, whatever it may be, into earning interest, taking on maybe additional price exposure through programs like your guys' B2X program. So I'm very, very excited just to see the constant growth for you guys, and hats off to you for that. But I wanted to ask you a little bit about what's kind of new over at Ledn, and also as well, maybe dive into some trends in the crypto space. I know that there was a really big feature release that you guys have recently put in, which focused on beneficiaries. So when you're dealing with digital assets, let's say, for example, you and I are family members and I pass away tomorrow, there has to be someone to be able to claim those in that case, or be able to protect or take care of those assets. So you want to spend a little bit of time to maybe talk about that with Ledn?
Yeah, absolutely. So estate planning is it's a very interesting topic in the crypto space, because there is a lot of the movement was built around self-custody, right? And there are benefits and trade-offs when you're using self-custody. One of them is that for planning things such as estates, then you have to have very intricate plans so that they can be properly transitioned, right? So one of the requests that we received often from our clients, particularly the like larger clients or perhaps people that are older, is they would like to add a beneficiary to their Lightning account. So either their either their children or their significant other. So now that with the feature that we released this week, essentially you can go into the platform and select to include an additional beneficiary to your Lightning account, which is really a big peace of mind feature for our clients. And yeah, so that's amongst the sort of that's a very exciting recent release that we have. We have a few others on the pipeline for the rest of the year. But yeah, and then the other thing that we're seeing, kind of related to that, is the growth in interest from businesses. So what we've seen recently is an uptick from businesses that are looking to use our services to manage treasury. So either their Bitcoin holdings or their USDC holdings, which is something that it's a side of our business that continues to grow. So we're pretty excited about that as well.
Absolutely, man. I think honestly, as we've seen, there's not only a general interest in, and maybe Marissa, you can kind of build on this just to provide more context for people when you say businesses or maybe enterprise companies. I know obviously everyone's been talking, hand over heels about what MicroStrategy is doing and what a few other companies have done in the sense of acquiring Bitcoin. Is it more of just in this case treasury management? I could see, for example, utilizing stable coins or even crypto assets and storing them in Ledin to be able to earn interest. Or is it people who are really getting exposure to crypto and putting it to work very quickly through the Ledin platform?
It's a mix of both, to be honest. So big clients of ours, I guess a common case is miners. So miners use our savings accounts as a way to get a boost on their mined Bitcoin. They use our loans to essentially pay their fiat expenses if they don't feel like the timing is right to sell their Bitcoin. And so that's one use case that we see a lot. The one that we're starting to see often also is companies that are in the sort of crypto investment space, and they are essentially sitting on, say, a significant float of stablecoins while they're selecting or due diligencing their investment, et cetera. Or between it's sort of they use it as a home base, and it accrues a great rate while they basically select to do other things with those funds.
Yeah, I was going to say, Mauricio, I think it's awesome that you guys have started to offer stablecoin interest. And the reason why is because, just in the past 7 months, stablecoins have grown by 250% in total supply, most of that being in Tether and USDC. And we're also seeing a pretty big spike in DAI as well. And when you guys providing support for that, I think that's really major. But also, just kind of taking a step back in regards to some of the trends in the space, man. Obviously, you guys are growing very nicely. I'm curious, Mauricio, just to as we chatted last month, there was already enough craziness. There was all these vegetable tokens, all the speculation in DeFi. And now, all of a sudden, we are now at this point where, for some odd reason, we're now focused on NFTs and collectibles, even though this has been a topic since back in December 2017. So I'm really curious to get your take on what you make of it, man, working in the kind of enterprise side of things.
Yeah, I think, listen, people were paying attention to DeFi. And I know a lot of people that are, very invested in the Bitcoin space or in the crypto space in general, who were paying very close attention and even participating in a lot of these, very, I would say, highly speculative projects. What I think is happening is that really, I think what I see in the narrative is people are starting to wake up to the fact that everything that shines isn't gold. And that it just because you go and buy a recent listing on Uniswap doesn't mean you're going to wake up to a 10x or a 3x or 4x. You could wake up to a 0x. And so I think once the sort of once people kissed a few frogs and they don't turn into a prince, they start asking questions, and they say, and once people start losing money, people start asking questions. So I think so far the party was great because everything was going up, and there hadn't really been a significant correction where people were, got hurt, for lack of a better word. But I think we saw that now 2 weeks ago, and people are all of a sudden saying, okay, well, this isn't free money. I'm just not going to sit here and collect free vegetables. I can actually lose money. And there's sort of I would think it's just like a pause breath. It's just a bit of a reassessment. and taking a second look before going in again.
I want to definitely speak on that because Mauricio, like, and really, this isn't me just trying to kiss up to what you guys are doing and stuff. The thing that I really I hate about this space right now is there's a bit of an ignorance right now because I'm all for DeFi. I mean, I built digifox and stuff, and I love what you guys are doing about getting interest yield. I even consider deposit providers like yourself as kind of a part of the portfolio for DeFi. But the thing is that's so kind of aggravating to me is that I've seen a lot of people who don't trust the custodianship of funds in this case from a company like Ledin. But at the same time, they're completely fine with unaudited smart contracts from anonymous teams that have launched something on chain. They're testing it on mainnet, and they're promising these ridiculous yields, and they never provide the actual clear transparency about how they're actually going about getting these yields. And that's the same, in my opinion, with Yearn. It's the same with Yam. It's the same with all these different things like SushiSwap. It's just this kind of sporadic nature. When something goes wrong, when people lose a lot of money, the community is just like, oh, don't worry. It was an experiment. We all knew it. It's like, what you guys just criticized the centralized providers who've been doing their business and doing it great for the last 2.5 years. It's like, to me, it's a bit shocking to say the least.
Yeah, I mean, listen, we have there's a wide spectrum of people in this space, and there are people that, and sometimes you'll find the same person being widely conservative about one part of their portfolio, but incredibly reckless with another part of their portfolio. So, although it feels a little bit counterintuitive, we've never steered away from our vision and our mission, which is strip away the complexity of these services, making them dead simple, incredibly transparent and easy to use, and just make ourselves available to answer any questions people have, because this is a new relatively new I guess movement or experience, and people naturally will have questions. So we from day one, you've known us, we stayed away from tokens, we stayed away from anything that could complicate the experience or could complicate our future really as a company. So we stand proud by our decisions, and we feel like they're getting validated. Like today, we saw the unfortunate news that came out of Salt, in the SEC. I'm not sure if you caught up to that, but essentially, so the SEC is issued a cease and desist to Salt to essentially return all the ICO, all the funds that it raised through its ICO, and so I guess what that tells us is that there are people looking at what these companies are doing. And I think that, if you're not careful about how you try to execute, then, you put the company and your clients at risk.
Absolutely. Yeah, Marisa, I think above all and stuff, one thing that just kind of still stands out to me with a platform like Ledin, or kind of like the more kind of centralized providers where there is custodianship. The nice thing is that the services are not only much more accessible, but I think having the human element of being able to communicate with someone is very, very important. You're not able to communicate with the MakerDAO team, generally speaking, when you're worried about a margin call on your DAI contract. There's all these things that DeFi is going to have some patch spots until it really gets into a form where it's it's consumer friendly in this case and can really work for everyone. One thing I wanted to ask about, Marisa, that just kind of was making me think about this. So you're talking about the shift away from from DeFi. You're talking about NFTs. Do you think this is also going to lead into kind of a trend for people going back to Bitcoin being more the focus point in the short term? And also, how do you kind of keep up with everything going on in the Bitcoin market right now? There's a lot of things going on there as well.
Yeah, I think there will be a bit of a return to Bitcoin, and I think it's the equivalent in the crypto markets of the flight to safety that we see in sort of the equity markets. And the reason I say that is because it's very difficult to deny the momentum that Bitcoin is having. When you have announcements like MicroStrategies, when you have guys like Raoul Pal, when you have guys like Paul Tudor Jones, we're talking about like large institutional investors, and we're talking about very active futures markets with very, very deep liquidity. So I think as Bitcoin, frankly, as its price continues to improve, which as I think it has a really good chance of doing so towards the end of the year based on the macro tailwinds that we have, it's just this consistency. Right now we're at a record number of days with closes above $10,000. And that's something that people pay attention to, particularly larger people, larger investors. That it's funny because there's a saying in finance where if you take a salesperson to the cliff and you show them a cliff, they see what a beautiful sky. But if you take a risk guide to the same point, they say, oh, it's a long way down. So it's funny because a lot of these institutional investors are it's a long way down type of guys. And the longer we can show Bitcoin as stable and almost quite boring, it'll be better for them.
Absolutely, Mauricio. And I think you guys have started to produce some really good content as well, just kind of diving into some of those kind of events and data points that you just referenced to being able to spot key technical patterns and price. That's something that I like to focus on a lot. And along with that, as well, as you mentioned, focusing on some of the kind of bigger events here that we're going to want to focus on in the sense of like, for example, it's not just the halving event that happens on in Bitcoin. There are also other major events like around the futures markets, as you mentioned. So I know just to let you guys know if you're interested, I know Mauricio started to create some great content over on the Ledin YouTube page. So I'll leave that link down below in case you guys want to check that out. But Mauricio, I mean, it's fascinating to see what's going on, man. I think Bitcoin, I agree with you. I think probably around Q1, Q2 of 2021 is when we'll break above those highs. I actually have more of a kind of conservative estimate comparative to most. I try to keep my expectations low. And I think that the great thing is that we not only have the great probably price potential here for Bitcoin in this kind of macro environment as a safe haven asset, but along with that as well, there's platforms like Ledin as well, where you can kind of get that interest on your Bitcoin if you're just planning to hold it in the long term and actually getting to put it to work. So I'm very excited for you guys and just so proud to see all the success you've had ever since we first chatted back. It's been over a year now, man. I think it's been about a year and a half.
Yeah, it's been a wild ride, and thank you for mentioning for your kind words. Coming from you, it certainly means a lot. Like we just started this initiative. It's called the Bitcoin Economic Calendar. So it's a show we put out every Monday morning with essentially news that are upcoming for the week. So we cover difficulty adjustments, we cover Fed meetings, we cover inflation announcements, GDPs, more in a forward-looking way. So we give you essentially a calendar for the upcoming week with the dates that these events are planned for, so that you can prepare.
Awesome, man. Well, everyone, if you get the chance, go check it out. Mauricio, I bet those videos and the content you guys are putting out are just as exciting, these conversations that we get to have from month to month. So I really enjoyed it, man. Thank you for making the time. And thank you all for watching the video as well. If you're interested, go check out the Ledin link down below if you want to start earning interest on your crypto or your Bitcoin or stable coins. And Mauricio, keep up the good work, man. You guys are continuing to crush it.
Likewise, Nick.